Okay, good morning, everybody. Welcome to our event to discuss the findings and implications of our latest report released today called an Uneven Recovery, How COVID Debt and Savings Will Shape Post-Pandemic Cities. The research has been kindly supported by Clarion Housing Group. We thank them very much for their support and help with the research and with the project. We've got a great panel to discuss the report, and I'll introduce them in a moment. But as always, just a few words of housekeeping. As always, the event is being recorded and it'll be made available on our website after the event. During the event, your microphones will be kept on mute. If you want to tweet about the event, the hashtag is COVID Debt Saving. There will be opportunities for questions to the speakers. You can submit your questions at any time. You don't have to wait until at the end, and you do this by submitting your question via the chat function to ask a question. We'll get to the questions after we've heard from our panelists and speakers. If the time allows, we like you to ask your question, so be prepared. But if you prefer me to read them out, then that's also fine. Just let us know when you submit them, and we'll be done by 11:30. So let me introduce our speakers. So first off, in a moment, we're going to hear from one of the report's authors, my colleague, Elena Magrini, who's a senior analyst at the Centre for Cities. After Elena has set out the report's findings and recommendations, we're going to get some responses from our panel, and our panel are Clare Miller, who's Chief Executive of Clarion Housing Group, Peter Tutton, who's Head of Policy at StepChange, and then Martin Reeves, who's the Chief Executive of Coventry City Council. So without further ado, Elena, over to you.
Thanks, Andrew, and thanks Claire and Clarion for supporting the report. As the vaccine rollout continues and the restrictions start to be lifted and the economy reopens, we are increasingly hearing more discussions about the economic recovery and how that will be affected and how quick or not quick it will be. And we've heard many people from different sources suggesting that the recovery from COVID-19 will be particularly quick because households in the UK have been able to accumulate savings throughout the pandemic because we were no longer going to pub and restaurants, we weren't commuting to work, as much as 150 billion in savings according to the Bank of England. And so we started thinking about this and the implications for recovery for different people and places. Because we also know that while this is true, on the other hand, a lot of people have lost their jobs because of the pandemic. And from our previous research, we know that these effects are not even across the country. So with this research project, we wanted to understand a little bit more the nature of COVID savings and debt, how they've been affected by the pandemic, and what this means for the recovery as we are trying to go back to normal. So firstly, to try and understand these patterns, we need to try and understand the effects that the pandemic has had on household finances. And in this respect, there are two different opposite effects of the pandemic. On one end, we know that the pandemic has undoubtedly helped enable people to reduce their spending. The restriction put in place to fight it meant that we no longer could go out to pub and restaurants, we were working from home, and all of this has indirectly enabled us to cut our spending. But this effect has been different for different people. And what we find in our analysis is that it is actually people that live in more affluent urban areas that have been able to cut more. And that's because, as you can see on this graph, the light blue bars are bigger the higher the income quantile. So people living in more affluent neighborhoods had more money, they used to spend more money on non-essential services before the pandemics, on travel, accommodation, food and drink. And so they were able to cut more during the pandemic. As much that for every pound not spent by people in less affluent urban areas, people in richer neighborhoods have reduced their spending by 12 pounds. So different effect on the spending reduction induced by the pandemic. On the other hand, the pandemic has also had an income effect. We know that a third of the UK adult population has seen a reduction in income because of the pandemic, either because people had to start claiming unemployment-related benefits, or even because they were put on the furlough scheme, which was a great support for people, but still meant a reduction in income of 20%. And when we look at all these things together, what we see is that, again, the effect on income has been uneven and different people have had a different experience. With the exception of a handful of places, it is mostly people in less affluent urban neighborhoods that have been affected by income drops, as much as they were twice as likely to see an income drop than people living in more affluent neighborhoods. So spending on one end, income on the other end, both have been affected by the pandemic, and both have been affected differently according to different households. And this then has three different spatial implications for our largest cities and towns. If we combine these two forces together, what we can try and start to see is estimating whether the reduction in spending has actually resulted in savings, or if instead people have been pushed into debt by the pandemic. And what we see in this graph is that there are pandemic winners and losers in every city and large town. The purple dots on this graph represent poorer neighborhoods in our cities and large towns. These are neighborhoods where income is normally lower, where more people are likely to live in social housing. And what we see is that these neighborhoods tend to cluster mostly in the top right quadrant of the chart, which signals that in these places, people have been more likely to see a drop in income, but they've been less likely to see a drop in spending. So their spending has stayed pretty much the same throughout the pandemic, but their income has dropped. And these two things combined suggest that they might be financially struggling. They might have been pushed into debt because of the pandemic. On the other end, instead, we've got the green dots. These represent richer neighborhoods, more affluent neighborhoods, again, in all our cities and towns. And what we find is that instead, these are clustered towards the bottom left corner of this chart, which is a place in which we see small drops in income. So the income in this group has stayed pretty much the same throughout the pandemic, but spending have been cut a great deal. So a great reduction in spending, not so much a reduction in income, might suggest that the reduction in spending is indeed translated into savings. And obviously there are a few exceptions, as we can see on the graph. And one thing that I'd like to point out is that you can see a few dots, both purple and green, on the bottom right corner, which is places that have seen both a large drop in income and a large drop in spending. And these are places like London, Crawley and Slough, where we've seen that the pandemic has had quite a hard effect, big effect on the place, but it's harder to estimate which effect is stronger. So, but the main takeaway from this graph is that it is really important to stress that in every place we've seen pandemic winners and losers. The thing is that, however, when we look at the distribution of overall affluent and less affluent neighborhoods in different parts of the country, there are more of the affluent neighborhoods, more of the neighborhoods that we are estimating that they might have saved during the pandemic in cities and large towns in the south of England. In places like Exeter, Aldershot, Reading, York is also one of the places where we estimate there are a lot of neighborhoods where people are likely to have saved throughout the pandemic. Whereas on the other end, there's fewer of these neighborhoods on average in cities and large towns in the North and Midlands. And in contrast, instead, what we see is that when we take the whole picture, we see that overall there are much more neighborhoods in which people may be financially struggling because of the pandemic in cities and large towns in the North and Midlands, with Hull, Bradford and Liverpool topping the rank on this measure, with approximately people living in one in two neighborhoods likely to be financially struggling because of the pandemics. And these two things together kind of bring us back to where we started, the COVID savings-led recovery. And actually, these findings tell us three things about this COVID savings-led recovery. Firstly, if savings will indeed fuel the economic recovery, as has been predicted, it will be mostly cities and large towns in the south of England to benefit from it. And this is a really important point, because if we said that there are pandemic winners and losers in every place, the people who have lost their jobs, the people that are financially struggling in the south of England, are in a much better position to bounce back quickly than those living in cities and large towns in the north, because the spending accumulated by more affluent neighborhoods will be reinjected into the economy, creating job opportunities for them. That, however, is less likely to be the case for the people who have lost their jobs in cities and large towns elsewhere in the country, because there is less money that has been accumulated throughout the lockdowns and throughout the pandemic period. And in these places, instead, what we're seeing is actually an additional challenge that of increased level of indebtedness, because more people have been pushed into these situations. And we need to also remember that in cities and large towns in the North and Midlands entered the pandemic in an already more vulnerable position compared to other parts of the country. So, what does this all mean for policy? What does government need to do? The government has done a pretty good job throughout the pandemic to protect people from experiencing the worst effect from it. The job retention scheme, the universal credit uplift have protected incomes, mortgage payment holidays have protected people and supported them with their immediate spending needs. We now need this support to continue rather than being phased out, because what we're seeing in the next coming months is that the economy is gradually reopened, but it hasn't yet fully stabilized. The schemes are being withdrawn, and this is likely to leave people in very vulnerable situation. So what we need is to make sure that the support is in place up until the economy is stabilized. And what we need the government to act on is on four fronts. We need government to support people with their immediate spending needs, again, extending existing support until the end of the year in terms of mortgage and payment holidays, extending the free school meals program during summer holidays, for example. We need government to support people dealing with their debt, for example, by introducing a debt relief programs for COVID-related debt, or mandating that small debt accrued because of the pandemic does not affect people's credit scores. And we also need the government to protect incomes. So we know that the JRS scheme and the universal credit uplift are both coming to an end at the end of the summer and at the beginning of autumn, and we need them to actually reconsider that. We need the government to make the universal credit uplift permanent and to extend JRF for sectors that are still affected by the pandemic for as long as they are affected by it. And over the longer term, we also need the UK to review the social security system and bring it in line with other European welfare states. And these three measures are not just really important from a social justice point of view, like we need to support people who are financially struggling. They're also really important for the economy, because this means there will be more money that can be reinjected into the economy, helping places to recover, helping people to go out and consume, and then creating jobs. Then these three measures will allow us to bounce back or to get back to where we started. But the thing is, different places entered the pandemic in very different situations, with places in the North and Midlands already lagging behind other parts of the country. So what we need is also a commitment from government to level up for the longer term, to create job opportunities in cities and large towns in the North and Midlands, to ensure that these places won't enter any other economic downturn or any other pandemic in the vulnerable position with which they entered this one. So that's it from me. I'm gonna revert back to Andrew. Thank you.
Elena, thank you very much indeed. Don't forget, everybody, if you've got a question or a reflection on what you've heard from Elena in terms of the analysis or the recommendations, then just pop a question into the chat function, ask a question, and we'll get to them once we've heard from our panelists. But let's turn to them now. Claire, let's get some reflections from you on what the report is saying, but more generally what you're finding with your with your tenants. Claire.
Thank you very much, and it's lovely to be here this morning. I just wanted to start by talking about the lived experience of our residents. And this report is so important to us because we wanted to understand more about how our residents had experienced the pandemic so that we would be in a better place to tailor our services appropriately as we start to head into recovery. So if I start by telling you a little bit about what we already know about our customers who live in Clarion homes, 56% of Clarion households have at least one member of the household in paid employment, although increasingly numbers of residents are in insecure employment. And I'll say a little bit about that in a moment. Most of our residents either pay their rent themselves or partially pay their rent themselves with the assistance of benefits. And around about a third of our working residents work in health and social care. So they have been very much at the front line of the national effort to get us through the last 12 months. The average household income for a new resident coming into one of our social rented properties is just under £15,000 per annum. 63% of Clarion households are headed by a woman, and our own insight, which is backed up by recently published research, shows that women in particular have suffered disproportionate impacts in terms of employment and finances. And many of our residents work in roles that were part of the social fabric that kept us going through the last 12 months. So many of those described as key workers in the UK also live in our homes and in social housing. We know that employment is absolutely essential in terms of lifting households out of dependency on welfare. However, in itself, it doesn't necessarily enable people to escape entirely from poverty. But the combination of work and security of tenure is absolutely essential for people's life chances to improve. I have to say the rise of zero-hour contracts and employment instability has contributed to the ongoing difficulties that many of our residents experience in terms of sustaining a home. 23% of Clarion residents taking part in our own longitudinal study on resident experiences of the pandemic say that they're having to dip into their own meagre savings to pay for essentials. And when we look just at those Clarion residents who are in work, that figure rises to 27%. And I can tell you that households in social housing do not have significant savings. So that is a very clear indicator of stress for the future. So that's what we know about those who live in our homes. So why is this research important to us? And I think it's so important that we shine a light, particularly on how existing inequalities have deepened as a result of the last 12 months and the effects of the pandemic. We know that many of our residents were already in a precarious position prior to the pandemic, and the longer it's continued, the more it has eroded whatever financial buffer they might have had in the first place. This research, I think, serves as a salutary reminder to national policymakers that there's lots of variation across the country and indeed within towns and cities. So the wave of optimism that we read about sweeping the country about recovery is excluding some very key groups. And I therefore urge policymakers when they are thinking about the future, not just to think about the average UK resident, but also to ensure that they think about those really difficult cases who might be in extremely desperate circumstances. And I think if the government's levelling up agenda is to succeed, it needs to be informed by a deep understanding of the communities that we represent and the experience of millions of people who live in social housing. There are, as Elena said, some punchy recommendations in this report, and some very practical things that government and policymakers might consider, which I think would make a hugely significant impact as recommended in this report. But in particular, I would like to pull out the government has a unique opportunity with universal credit. There is no doubt in my mind that the £20 weekly uplift has been of huge value to many of our residents. And the impact of taking that away will be deeply felt. So in conclusion, I mean, I think housing associations across the country, and there are many of us, have worked extremely hard, tirelessly over the last year in neighbourhoods and communities, supporting local initiatives, and in our case, many hundreds of organisations providing essential lifeline service. Our work isn't finished. The need to continue supporting those communities will continue as we move into recovery phase. So I've been delighted that we were able to work with Centre for Cities on this important research, and we will continue to use our voice to influence positive change as we come out of these terrible times.
Brilliant. Thank you very much indeed, Claire. Lots of things to pick up on. Your point about the average not being helpful when we think about the extreme variations that we see, not only between places, but actually within places, I think is a critical point. And your re-emphasis on the lifeline that the uplift to universal credit has had. And I'd be interested to see other panelists whether we think that is the extension of that, or the making that permanent might become possible, which we might pick up in Q&A. But let's turn to Peter. Peter, you've been providing debt advice and support throughout, so just give us a view on what it's looked like from your perspective.
Thanks, Andrew, and morning, everyone. So I'll tell a bit of a story now that sort of builds on really what Elena said and what Claire has said about a differential impact on different households, and also what we think is going on in terms of the build-up of households becoming more vulnerable to debt. We hope that the recovery means that sort of households will, incomes will recover, and the worst won't happen, but we see in our research a growing debt hangover that hasn't really fully crystallised yet. So the implications of COVID may still work out as support has withdrawn. So I'll say a little bit about that. So firstly, we find a similar thing, kind of this differential between households that have been able to increase savings and reduce their debts on the one hand, and other households that have had to run down their savings and other forms of support and get further into debt to cope over the last year. And there's a growing body of evidence telling us this. So a few impact stats from our sort of polling and research. So we think around 14 million people, maybe 15 million, have experienced a fall in income since the pandemic that affected their ability to meet day-to-day costs. So a sort of significant impact on household budgets. Around 2/3 of those said that their income fell, but their household expenditure stayed the same or increased. So echoing some of what Elena said, that households, that not everyone has had this decrease in expenditure that's allowed them to save. Many of those affected by income shocks have actually seen increased expenditure, and about 14% report both. So their income's gone down and their income has significantly increased as well, pinching their budgets even worse. So out of those that have been affected by COVID, we estimate about 6 million are currently experiencing some form of financial difficulty, about 4 million behind on household bills, including things like council tax, rent and utilities, and around 2 million now showing signs of more severe problem debt. And about 1 in 3 of those experiencing income shock also saying they're starting to experience hardship, like skipping meals, rationing utilities, those kind of things. And the impact in terms of the number of people affected has not grown that much since the early days of lockdown, so people were affected quite quickly. But what has grown is the sort of deepening of the consequences. So we've seen those that haven't been supported as well, the hardship and the kind of sort of debt impact getting bigger. So who are the people affected? So firstly, self-employed, those in insecure work and part-time work seem to be most likely to have a fall in income. So reflecting what Claire was saying, like your tenants, our clients are, a majority of them will come to us with someone in the household in work, but that work won't be enough to keep them out of debt and or necessarily keep them out of poverty. And that sort of insecurity of income, self-employed, insecure work, part-time work is a big feature of the debt problems we see. More specifically, different groups: young renters, particularly hardly hit, parents with children under 5, single parents, and people with a minority ethnicity. Working age adults have been hardest hit financially by the pandemic. I think the key point for here is these groups look very much like the people that we were seeing disproportionately coming to debt advice before the pandemic, and actually for much of the last decade. So our clients have been sort of increasingly young people, very disproportionately single parents, and actually tenants as well, renters. About over 80% of our clients are tenants. So you put all this thing together, and over the last decade, debt and the debt problems we've been seeing has really been about those people with the least financial resilience, with lower and insecure incomes, but also often facing relatively high living costs relative to their incomes. And COVID seems to have amplified this. So how are people coping, and how has the support response worked? So the first thing, one of the things we're seeing is a large build-up of debt, this sort of debt overhang building up. We think 11 million people have built up as much as 25 billion in both arrears, but also borrowing to pay for essentials since March 2020. Now, some of that is a direct result of COVID. Some of it would have happened anyway, but people's ability to kind of deal with that debt overhang will be constrained by COVID. Something particularly concerned with, reflecting on what Claire was saying about tenants, but something like nearly 500,000 private sector tenants behind on rent payments, with 150,000 saying they're worried about being evicted in the next 12 months. Private tenants are now the biggest sort of single tenure group amongst our clients, and we are seeing more people with kind of vulnerable characteristics and very precarious incomes in the private rented sector, which is sort of uniquely poorly placed to deal with those needs. And given the limited protection, we're worried what will happen as the eviction suspension unfreezes. That all said, we're in an interesting place at the moment that this big debt overhang and strong evidence of people struggling, and a growing and large group of people struggling, has not yet completely was not translated into increased demand for debt advice. Actually, through most of the pandemic, we've actually seen debt advice demand reducing below what it would be normally. Well, that's interesting because it says that actually the COVID support schemes have been effective in helping people, and we would expect that, given 400 billion or something chucked into the economy, you would expect it to have an effect. But it also tells us that it's supported people and stopped people getting into debt problems who would have got into debt problems anyway in the absence of COVID. That's what it suggests, which is interesting. And so the combination of things like payment holiday, retention scheme, self-employed support, all been important, but they're actually relatively untargeted in terms of need. So I might have, someone may be furloughed, but their partner may not be furloughed. So the household income may reduce, but it may still be enough to meet their needs. So in that sense, the support is not targeted as tightly as, say, for instance, universal credit, which raises another differential. There was a big spike in claims in universal credit after lockdown, and we certainly saw an increase in the proportion of our clients in receipt of universal credit, which actually is now a little bit as employment in some areas is opening up. But those on universal credit, over 40% of our clients with universal credit have negative budgets. That means they don't have enough to pay their essentials, so they're going to fall further into debt. So that safety net isn't stopping them getting further and further into difficulty. And interestingly, we estimate that would be 70% of them in negative budgets if it wasn't for the help, but it's still not sufficient to make the safety net effective, or effective to keep people from falling further into debt. So the key question is what happens next as the support is withdrawn, and you know, we don't know, but we can think about some of the pointers. In December, we published some work which was kind of doing some polling with our clients who had come to us since lockdown. And what we really got then was a sense of people who had been coping and using their own resources, support from family and friends, their savings, very much as Claire said, but they'd just run out of road. You know, as it went on, they run out of road. And there's one of the questions there was, are we now going to see, as the support has withdrawn, and the support may withdraw before household incomes recover, particularly in the areas that Elena has talked about, where we may see many more households find that they run out of road. Debt enforcement starts to open up again, things like rent evictions. So where we think we are going to see more people coming to debt advice in the near future. So just to sort of wrap up, I mean, there are some lessons to be learned here about how support has been effective for some people, and at least for a while, but it hasn't been effective for everyone. And actually, the sort of patterning of that effectiveness sits on top of the pattern of sort of financial insecurity of households, which this research shows is also patterned spatially. So all these things kind of lining up on top of each other. So the recommendations that you talked about, the need to look at how safety nets work, we support that. The need to keep the support that's there, the extra £20, but go beyond that and think about how we really help households with income shock, would support that. And the need to help households manage down this debt overhang in a safe way, not a chaotic way that pushes people further into debt and hardship, is absolutely pressing.
Great, thank you very much indeed, Peter. Again, fascinating insights about what you're seeing and how the issues are evolving and changing, but also in some respects, when you think about the future, and Claire sort of alluded to this, this is sort of interesting tension, I suppose, or way forward about how do you balance opening up the economy and the restrictions and removing them and letting the economy kind of begin to work more effectively and efficiently, whilst also providing support to those that need it. And I know that's a real live sort of question that the government is grappling with. So maybe we'll come back to that when we've heard from Martin. But let's turn to Martin Reeves. To say Martin is the chief exec of Coventry. Full disclosure, he's also a board member of the Centre for Cities, so he keeps me honest. Martin, give us a view from Coventry, but also connect the issues we've been discussing also with the thing that's on your mind, which is about city recovery and how you kind of help the city itself to be more prosperous, which then has positive effects for residents and for workers. Martin, over to you.
Thanks, Andrew. Hope you can all hear me well. I'm welcome from Coventry, UK City of Culture 2021, and welcome to each of you as well, because I'm speaking to you from the Telegraph Hotel, our newest hotel offering in the city, formerly of the Coventry Evening Telegraph offices and Princes. All great packages are available for friends and family. So good to see you. Look, that's upbeat because there's a lot of very vibrant stuff going on in my city and in many cities, thankfully, across the UK. But let's now be bleak, because I'll give you 8 very quick views, and they will be quick, on what I've heard, what I've seen in the report, and what I think. Number one, following the devastating impacts actually of the global recession back in 2008-9, really proud that Coventry City Council led a citywide systems-based approach using pretty novel algorithms, mathematical predictive modeling to stop the pop idea about what people think is going on with regards to household indebtedness and people that are struggling either on or below the poverty line as we established it, and actually use real data, real time, right the way down to sub-community level and household level. That stood us in good stead, because it allowed us to really do the hard yards across all of our partners and all our communities to try and address some of the major impacts that were unfortunately hitting unfairly and unequally across the city as a result of the last global recession impact. So that was number one. Number two, one of the things that we did, which again I've learned and we've learned significantly from, and have talked to a lot of other cities up and down the country, is that working quite innovatively and in partnership again with some of our big players who happen to be HQ'd in our city. E.ON, for example, is one of the largest energy providers on the globe. Severn Trent, our great voluntary community sector, including Citizens Advice Bureau, the Coventry Law Centre, was using that data and insight, along with our WM Housing, who we offloaded our stock to in Coventry many, many years ago, to think about how we could work together with really quite innovative schemes to, once understood the data, get up front as early as we possibly could, not just on basic stuff like payment plans, but thinking even more differently about how we lock those into new job opportunities, new training opportunities, and actually use the weight of our anchor organisations to do something different rather than just banging on from the sidelines about how difficult this would be for those residents in our city. So thirdly, what I saw that do evidentially was make a really positive difference right down at household level, because we had the data. And actually what I say without going into the granular detail is what we were able to see as we started to get off our knees from that global recession and recover last time around in Coventry was we started with the kind of households that we've heard passionately talked about from Clare within her housing group, also with the great work that Pete's doing. Actually, we started seeing choice coming back for those households. Not great choice compared with some of the choices that we might be lucky enough to have, but we started to see some alleviation and some choice. Sadly, though, as a result, this is point number 4, as we entered into the pandemic, as a result of some of the structural impacts of Brexit and some of the ongoing austerity, high demand challenges that we were seeing, and many of the things have already been mentioned by other panelists, we saw those hard yards starting to be eroded and the fractures starting to appear again, and those choices going again from those households. By the way, at the same time, we saw the unequalness continuing to get larger. That was entering into the pandemic. As tough as the last 18 months has been, the toughest thing is that we've seen those inequalities as laid out and including in the report, with a coach and horses being ridden through them, they're now deeper and wider as a result of what's happened over the last 18 months. And not enough time to explain exactly or why and how that's played out in Coventry and many other cities, particularly in the Midlands and the North, as Elena's already said. Actually, this started to open up those fissures and those fractures again, very, very sadly, and continue to. So what we've now seen, fifthly, is a huge amount through the pandemic of consumption patterns changing, ridiculous headlines, which this report hopefully starts to address and dispel, that everyone is sitting on amazing savings opportunities. Spend patterns have gone down. Yes, they have for those households that have net high income levels. For those households that we really, really are focused on and have been since 2008-9, we've seen higher cost, higher consumption within the domestic environment, utility bills, food, looking at activities for their children and their families, travel, etc. This has had a really devastating impact and made those gaps bigger. So number 6, what we're looking at now, unfortunately, is a series of really quite serious structural challenges, even in cities like Coventry, that, as Andrew said, has got some huge emblems and symbols of economic success coming into the pandemic and even through it. So even for us, we're seeing some of this play out now on a daily basis. At the same time, remember that we're seeing significant demands that people say were hidden. They weren't hidden. Actually, they weren't latent. They're real demands now around mental health services, alcohol and substance misuse, domestic violence abuse across our city. So actually, all of this stuff now needs to be addressed, unfortunately, yet again, falling on those that have actually struggled the most previously in our city and have actually not been able to connect themselves to the great uplifts that we've had over the last few years in a way that all of us would have wanted. So 7th thing, and Andrew asked me just a penultimate point to talk about, so what about our response to all of this? Well, we are UK City of Culture, if I've not mentioned that already. We are main host alongside Birmingham for the Commonwealth Games 2022. We have literally lifted over the last year and a half of the pandemic, nearly £300 million worth of capital programme delivery in Coventry alone, including an £80 million reimagination of our railway station and the start of a £500 million city centre revitalisation programme. So we're lucky It's not serendipity. We've worked hard. We've laid this out for a long time. But despite this, we now know, because of everything that I've said and we've heard in this report and we've heard from panelists, that the ability for us to be able to connect our people to those amazing successes and open up our city centre of the future to be a really inclusive space for those people to be productive, to share and enjoy with each other different activities they've been excluded from the past, feels very, very elusive to us at the moment, and we're not prepared for it to remain elusive. It is simply too important for us as a city, and many other cities I speak to. We have to connect differently, and that goes back to my first point about 2008 and 9. Anyone who thinks this is some kind of virtual reality play where we can hide behind theory, this is attritional, it's hard yards, it's connectivity. It's stop people talking blandly about social value, driving up opportunities for those furthest from the job market, whether they be our youngest from a lost generation as a result of the pandemic, or our 50-50 pluses also feel lost within those households from being unemployed and need retraining, confidence to get back into the market. That's not words, that's real yards that need to be made attritionally every single day. And it's forensic, and it's understanding exactly how we might do this with our communities, with those households who are in the most challenging position, not for them. That's not the asset-based approach that we can deliver in Coventry. So this is not finally about a recovery. I've talked really openly and upset some people with how blunt I've been about this. This is not a recovery we're looking for. A recovery by definition takes us back to where we were pre-pandemic. That is unacceptable. That is unacceptable. This is a reset and a reimagining of our great cities and our towns up and down the country to provide greater opportunities, but particularly to those who are not able to access them in the way that they should, because it's unacceptable. We're not going back to where we were. We're going back to a very, very different place and a better place. And finally, I get more and more frustrated, and I'm going to be really candid about this, about, again, in the same way that inclusive growth and sustainability is talked about around our growth and opportunities in our cities, these are not, again, words. These are policy shifts which have to be understood. It is as important in cities like Coventry that we level up sensibly, diligently, and courageously within our city, as it is between the great cities of the West Midlands, as it is to levelling up between those cities and towns and places in the South that clearly have greater privilege, greater access to government funding per capita than we've been able to in the West Midlands, Midlands and the North. So at all these levels, we need to level up. And so we need to move beyond the platitudes and start reminding ourselves that this is not just about the emblems of growth and success, it's actually about those households and communities that we've heard about already, that will be not just about the fear of a more equal, social, just city and set of cities in the UK, but actually much more productive, much more successful in every single way, cities of the future. That's in front of us, everybody. At the same time, where we're dealing in places like Coventry and other cities up and down the country with a funding situation and a funding structure which still is built upon a failed regressive system of council tax and business rates. So we need a major reform of that. And Andrew, you'd expect me to finish with that point. Thank you. Over and out.
Thank you very much, Martin. Brilliant. And I think we'll come back to that hopefully. And just explore how we make the opportunities that as they become available, we make sure that the people in these places are benefiting from them. But also, what you were alluding to towards the end is what more do places need in order to give themselves the best chance of not only to recovering to where they were, but actually going far beyond that across a range of different metrics. Loads of questions, and we've got sort of 15 minutes. So I want to dive straight in. I did say that I would encourage people to ask their own questions. So we've had several questions on this issue. Liz Stannard, if you're on the call, Liz, can you get ready to unmute and ask your question? And your question is about the universal credit uplift. So I'd like to pick that up because several others have done it. But Liz, I can see you're on the call. So away you go, ask your question.
Thank you, Andrew. Yes, I just want to know how confident are the panel that the £20 uplift to universal credit will be maintained? And if not, what immediate strategies and support do they envisage will be needed to protect households from further indebtedness and risk?
Brilliant. It's a great question. So Claire, let me come to you, because you talked about it. We talk about it. Where do you think government is on this issue? How confident can we be? What more do we need to do in terms of making that argument? But what other things do we need to complement that with?
I think, unfortunately, there are lots of competing demands on government. So I'm not wholly confident about this at all. However, I have to say that I think it's absolutely essential for the households that we house. There's 360,000 people live in Clarion homes. So, when I talk about the lived experience of our residents, it is informed by people who live in very deprived neighbourhoods and communities up and down the country. We're a national housing association. There's not many of those, but it means I can talk with some authority about what I see on a day-to-day basis, and there is no doubt that there's a disproportionate number of my residents are reliant on things like food banks to get through the everyday. And we've heard from your very eloquent speakers on the panel that those experiences are seen by others as well. So I think this is just an absolutely essential part of maintaining the status quo. And then, the ambition that Martin set out, I would wholly endorse, but that's a long journey.
Yeah, very good point. Peter, your view on the likelihood of the UC uplift being made permanent, and then you talked a little bit about the other support, other policies that are required in order to deal with the issue, and you particularly made the point that you think the worst is still to come because of some of the interventions, as good as they've been, have essentially held everything in abeyance, but things will potentially get worse if we don't get that. So, and then I'll come to Martin with a slightly different perspective on that. But Peter, your view on this?
Thanks, Andrew. I mean, obviously we hope and we will push for that £20 uplift to be retained, and you can stuff and hope that it lands, because if it doesn't go, it will make a already only partially effective safety net a lot weaker. And I think your point that the need to sort of look at how welfare safety nets are working against income shocks and supporting people in different circumstances, particularly people in work as well, does need looking at after that long period of austerity, because the safety nets are not working that well at the moment. Will it be, I mean, we know the government have been quite resistant to make it more permanent, and the preference of support outside of the sort of job retention, those schemes, has been for pots of grant money to be administered locally. So there is a sort of the support and so on, which are helpful, and there is an argument to keep those things going. Discretionary housing payments, the top up for local authorities to support people who are behind on council tax, although we have to think about how those things work. So when we looked at in our polling with our clients, people were accessing those sort of discretionary localised schemes, but in relatively small numbers, sort of 2%, more amongst people who are experiencing greater hardship, say 8-9%. But when you compare to the number of people that were borrowing to make ends meet, say for families with children in hardship, 69% borrowing to make ends meet. So the problem is with, if you don't withdraw universal credit and the kind of people, lots of different pots of support money are quite hard for people to navigate and get to, and are they sufficient and so on, what people will do will borrow, and that means they're much more likely to fall into debt. There is of course a question there. For years and years we've been talking about alternatives to high cost credit for low income households, and I know that Clarion do good work with credit unions, and that's something we think the government we need to massively increase. We need 1 or 2 orders of magnitude in the support for alternative lending. We've called for a no interest loan scheme, and actually both generally to help people support living costs going forward, essential items like if you need a new fridge, that kind of thing, which people often go to high cost credit for, but also to help people manage debts like rent arrears now. So it is pressing. We don't know what will happen next, but we can certainly anticipate that as other supporters will draw, more people will fall on these kind of discretionary schemes in the absence of an effective, adequate welfare safety net, and that's something that kind of needs to be addressed pretty quickly.
Yeah, no, it's a great point. Martin, I mean, pick up what your feeling is on the UC uplift, but I also wanted to get your sense as to, is there a wait and see, it'll all be fine kind of view in government, in a sense, once the economy opens, everything will go back to where it was, and that's all fine? I mean, I think there is that view, and obviously there are implications associated with that view, because going back to what was there before, as you said, in many places is not remotely satisfactory. But I mean, just kind of frame it in how you think that is thinking about that issue.
You're trying to prime me to get me into trouble, more trouble than I've ever gone before, aren't you, Carter? I can just tell. I've never been one with an economist background. I've never been one to believe evidentially or in lived experience, as Claire said, that trickle-down economics is going to work. Where a sense of, we've already seen the structural inequalities that are inbuilt in our system, even coming into the pandemic. So to answer your question, Dari, I don't see any sense of if the current government's policies, including on UC, are just hoping that these short-term alleviations will just allow us to get the tide rising, and then everyone will benefit, and these gaps will. I just haven't seen any evidence in the past that will work, and no evidence suggesting that will work anytime soon in the future. I wish I could be in front of all of you now with my other hat on that I wear, talking to Treasury and other government departments on the future spending in public services, to say it's absolutely a given. Of course, that alleviation will be structured in for the medium to long term. I can't have that confidence because of for two things: the fiscal position in aggregate that government's going to have to make, and I think a number of us have got sympathy for those balances. Of course, we would, any of those things. But also, there's not necessarily a history of strong policy in that area. So I think we have to hope. But the one thing I would leave you all with, in terms of my thoughts on this, and I think we see it, and we've heard it already from other panelists, we at our peril pick off individual policy levers. As important as UC is, the truth about all this is looking through the eyes of those households that are struggling the most, but actually on an aggregate level across the city, is it's a mosaic. So for example, if that didn't happen in the way that we want it to happen on UC, if we then see a whole series of other alleviations, and I could give you 1,000, all work away, if I don't see local government, including in Coventry, being given the right kind of level of both revenue and capital support. For example, in Coventry, we're deemed not a priority for levelling up. We're deemed not a priority for Community Recovery Fund. And I can show you some levels of inequality and challenge in our city that would make even my hair curl. So in that spirit, if we don't have that, and all of that washes away as well as that, then we have a profound compounded problem. If we see some really strong policy shifts, that they've listened to places about the ability to create back to work training opportunities, to really triage early and think about how we can structure those opportunities in for people like our social housing residents, etc., then that becomes not easy but easier. So it's a mosaic, Andrew, and I the only way you ever understand how this impacts is in our places. However well-intended these policies are from Whitehall or not, they only ever land together at the same time on our families at one time in our places, and that's where the sense or not sense of them plays out. And I'm seeing some real worries as those fall away, as they're inevitably short-term alleviations.
Yeah, no, that's a very, very good point. Let's just pick up on that. We have another question from we've had lots of questions. We won't get through them all, I'm afraid. Paul Stevens. Paul, if you're on the call, you're beginning to make the connections in the way that some of the panelists have between the issues that we're discussing and revealing in the report, but then the broader, bigger questions about the nature and shape of the recovery and leveling up. And in a sense, are these things all part of the same thing? So, Paul, if you're still on the call,
I am Andrew. Can you hear me? You can't see me. You can hear me.
Yeah, go for it.
That's great.
Ask your question.
And in many ways, my question is about levelling up and the rhetoric, whether government policy is actually rhetoric rather than substance. And in many ways, I think Martin's probably half answered that in his previous one. So what my question was clearly the pandemic has emphasised existing inequalities. The report shows that, and the panelists have all said that as well. The government's levelling up agenda. What is the policy behind the rhetoric? Is it real policy? And as you said, Martin, local governments, other people have seen major cuts over the past decade. And now there's a few pence under the table to be scrabbled up and bid for, which is supposed to be the answer to levelling up. I don't think that'll work. And I'd be interested to know whether the panelists feel is there much substance behind the policy?
Okay.
Thank you.
Very good. We've got the panelists in a second. I want to just give Elena first stabs on that, not least because we were very conscious in the work is trying to connect what sometimes are regarded as somewhat separate agendas, and more than that, to make the rationale for why you have to integrate the different agendas if we're going to be meaningful. So Elena, just say a little bit more about that, and then I'll get Martin, Peter, and Claire to say something on that broader point. Elena.
Yeah, I mean, as we were talking about earlier, different places and different people entered the pandemic in very different financial position and in different economic positions, with the divide between the North and the South being quite large already before we entered the pandemic. Now, as you see on my last slides, we had the 4 groups of recommendations for the government. The first 3 were about like helping places to immediately bounce back to where they were before. The last one was one which said level up for the longer term, which actually, if we wanted to dig deeper into that, that probably would be 100 different recommendations and a report on itself about all the things that the government needs to do to level up. And we actually have a report that we published last week precisely on this and on all the different measures that the government needs to do to level up. And absolutely, the pandemic has outlined and made even clearer that there are differences across the country. We also know that the pandemic hasn't necessarily followed the same leveling up story in terms of the places that it has affected the most. Some places in the South have been affected quite badly by the pandemic, but the challenges that were there before haven't gone away and needs to be addressed.
Brilliant. Thank you very much, Elena. Peter, just your thoughts on, trying to bring these and integrate these different agendas. How important is that for us to make progress on it?
I mean, I think it's very, very important, and I'm taken with what Martin has said, that it's about, there is a mosaic of stuff out there, and what really matters in the end is what difference does it make. That thing you said, Martin, about more choices for the people who had no choices, those that were struggling and the poorest and the most vulnerable to debt. So for me, I guess the challenge to government is for us is to set some challenges in terms of outcomes. So what actually do we want to see, and what do we expect to see as a result of levelling up? Will we see our clients coming to us with negative budgets, so after debt advice they can actually make ends meet? Will we see less patterning, so we don't see disproportionate numbers of people like single parents, who we know are often in work but constrained in their ability to progress their wage, and things like childcare costs can anchor them in kind of a low income sort of debt equilibrium? Will we see less people with other vulnerabilities struggling to make ends meet because they're being better supported? Will we see better protections for people like tenants if they do get into arrears, so they're not being affected by the most severe consequences? Will we see of our clients reduced harm, the harms we see in terms of mental and physical health problems, relationship breakdown, falling out because of debt stress, being unable to get back into work because of debt stress? Will we see those levels of harm reduce? So there's a sort of challenge here to government. The way that you confront rhetoric and see if rhetoric is real or not is really get down to what is the difference this is going to make, and what is the difference in terms of some of the most severe enduring problems that we see that levelling up should turn around.
Excellent. Thank you very much, Peter. Martin, I mean, you've said something on this already, but I mean, at national level, often kind of economic policy and social policy, are treated and thought about differently. But the point you make is at the place level, those distinctions make no sense at all. I mean, they have to be integrated in order to make progress on that. But just your thoughts more generally about where the levelling up agenda is and what that means, what we might need to do about it going forward.
So others will have to make their minds up, as Pete said, about whether these lead to better outcomes and choices or not, and evidence will have to play out over the coming years as to whether it's rhetoric or not. Let me tell you that what's synonymous with levelling up, and certainly government's view about how they stimulate economic revival in this country, is based on what I've always called capitalisation. Now, as they continue to put more and more capital into big infrastructure to grow our economies, Coventry's not going to say no. But let me tell you, the gap is now getting bigger between that and the ability to have capacity revenue with and through our communities to deliver the social infrastructure for change. And look at what we've seen through the last 18 months. Even with those households and communities that don't have those choices and they're being eroded, the kindness, the resilience, the capacity, the capability, the assets that have come out of our places has been humbling and amazing, and is the answer to the future. So the gap needs to be reduced between capitalisation and the revenue to deliver it. And the final comment, because I know we're rushing for time, we could say so much together on this. what I'm seeing, and I'd love to have a follow-up conversation with Peter, particularly and others, what I'm seeing and hearing from Citizens Advice Bureau, Coventry Law Centre, some of our advice services across the whole of the Midlands, is whilst we're seeing interesting fluctuation trends about people coming to us and presenting for the reasons that Peter said, guess what's happening? Which is absolutely going to be really interesting to see how the political response is. Whilst those families and communities have always struggled, continue to struggle more, we're now seeing families and households that have never had to come to debt, counselling, the mosaic of how they can order things because of structural unemployment, who have had their choices eroded. Now I think people have to stand up and watch, whether they like it or not now, that we've got this sense now of a growing tide level across our communities. It's not such a lazy thing to say, well, it's because they're locked in these really intergenerational challenges. This is now moving across and within and upwards within our cities and our towns. Now, I think this provides a great opportunity if we're prepared to level up in a really, really cogent social economy meets real physical infrastructure for change. And I'm worried that that narrative is not the one that's dominating at the moment.
No, very good point. Very good point. Claire, final thoughts from you about, I suppose, the value of integration, the value of building movements and momentum to make progress on the things that we've been discussing.
So, I mean, my final thought is that what some of these very deprived communities need is employment, and they need homes. The security of having a job and the security of having somewhere that you can call home is the essential bedrock for people to be able to deal with the most challenging circumstances. And the levelling up agenda, I mean, I think there is a case for a levelling up agenda in the most deprived neighbourhoods, in the most deprived cities and towns across the country. I don't necessarily see it as a north-south thing, but I do see it very much in the neighbourhoods where Clarion has homes. And, I would encourage a wider debate about that.
Yeah, thank you very much indeed. Good way to finish. So much more to be said, but unfortunately no time to say it. So I'd like to thank my excellent speakers, Elena for making the presentation, and then fantastic responses and reflections from Claire, from Peter, and from Martin. I'd like to thank Clarion Housing Group for working with us and being such a great partner on this project. We've learned a lot from working from you, so I really appreciate your involvement and support. Thank you all for coming today, asking great questions. I'm sorry we didn't get through all of them, but many of them were very, very good indeed, so much appreciated. As I said at the beginning, you'll find a recording of the event, the slides that Elena presented earlier on, and a link to the report all on our website, centreforcities.org. Our next event is next Monday, the 28th, which is focused on how to improve the transport systems within and between the main cities in the East Midlands, Nottingham, Derby and Leicester. So we get around in terms of the different agendas that we are thinking about, although they are all connected. So I hope to see some of you on then. But until the next time, take care and stay safe. Thanks very much indeed. Bye-bye.
Thank you.